Would you encourage investors to, if they were trying to get a lot of their investment, to use leaps on investments such as Coca-Cola instead of buying the stock?
Yeah, both the questions relate to futures of one sort, calls or whatever they may be, and I think that investors should stick to buying ownership in businesses. It's not that you can't come up with a theoretical argument for buying, say, I mean, if you think Coca-Cola is attractive, you can say, well, I'd rather buy a 5-year option on Coke than buy the stock directly because it introduces leverage without the risk of going broke. But I think that that's a dangerous path to start down because if it works well, it's dynamite to start playing with things that can expire and become worthless or can be bought with very low margin as the OEX options you were talking about. Borrowed money usually or frequently leads to trouble, and it's not necessary. I mean, if you had some compelling reason, if you had to double your money by the end of the year and be shot, then I would head for the futures market because you need to do it. I mean, you have to introduce borrowed money, but you really ought to figure out how you can be happy with the present amount of money you've got, and then figure that everything else is all to the good as you go along. I don't think people, once they start focusing on short-term price behavior, which is the nature of buying calls or leaps or speculating in index futures. Once you start concentrating on that, I think you're very likely to take your eye off the main ball, which is just valuing businesses. I don't recommend it. Charlie?
Well, this is a group of affluent investors, and I don't think many of them did it in leaps.
Yeah, it's certainly true. If we'd operated Berkshire with considerable borrowed money over the years, it would have done very much better than it has. But nobody knew what that amount of borrowed money the appropriate level would have been, and it wouldn't have made any difference to us. I mean, we have just as much fun doing what we've done than if we'd owned it on leverage and had been twice as much. I mean, it's not the way we approach it. If you have X and you think you're going to be way happier when you've got 2X, it's probably not true. You really ought to enjoy where you are at the point, and if you can make 12 or 15% a year, and you desire to save and you like piling it up, it'll all come in time. And why risk losing what you need, and have for what you don't need and don't have? It's never made a lot of sense to us.